Good evening, friends. Welcome to the IPO meet of Coolcap Industries Limited. The company is among the leading manufacturers of plastic bottle caps and closures in India. To discuss about the company and IPO, we have with us Mr. Rajiv Goenka, promoter and CMD of the company, Mr. Vansh Goenka, promoter and non-executive director of the company, Mr. Jay Prakash Shaw, Chief Financial Officer, and Mr. Ashok Holani, Director, Holani Consultant Private Limited, lead managers to the issue. So, as a part, we will first start with the a short video on the company about the giving the brief about the company.
We started our journey in the year 1994 as a distribution company dealing in polymers and flexible packaging raw material. We became multi-location. We opened up branches, come warehouse in Guwahati, Kanpur, Siliguri, Raipur. 2014 was a landmark year for us.
Basically, we are depending on Full Cap for my whole production. They are the sole supplier for cap, and the reason for being that their quality and their service. As you know, their name Full Cap, their service and quality is as cool as their name product name.
Going forward, we intend to increase our product portfolio and make diversified caps for the pharmaceutical industry, for cosmetics, for carbonated soft drinks, fruit juice, also venture into pet preform and handles so that we can have a basket of products for the beverage industry. We intend to diversify into PET bottle recycling. Basically, it is bottle to bottle and circular economy. From PET bottles, we will make high quality flakes, and from flakes, we will again make PET chips, which will go in making food grade bottle applications. So the journey is on. Do join us. Thank you.
Now I'd like to hand over the conference to Mr. Rajiv Goyanka to giving the remarks about the company and its business. Raju ji, over to you, sir.
Good evening, everyone, and a warm welcome to the virtual investors meet and press meet of Cool Caps IPO. You had seen the video. Basically, we started the group in 1994 as a distribution house marketing various raw materials for the flexible packaging industry. Our whole objective was to be a single stop solution for the entire flexible packaging industry. That means all the pouches which we use in the day to day our household, tea, biscuits, chips, sachets, the entire raw materials in the value chain that we either deal or we manufacture. The innermost layer is LDP film. That is what we manufacture in Pur Films at our Ranihati factory, and also supply the Pearl BOPP labels to the beverage industry. That's how we came to know that there is a very big vacuum of a good quality cap manufacturer in India. We started looking for the right technology. Then we ultimately decided that we should go for SACMI, an Italian company who makes the compression molding machines and who has the approval of all the leading water and beverage manufacturers throughout the world. Our first unit of cool caps came up in Howrah. It's in Saraswati complex, where we manufacture 27 Alaska caps for the water industry with a capacity of 6 crore caps per minute. It is a very high speed line, and you must have seen in the video that right from the beginning, from the auto dosing system and the PLC control and camera vision system, where there is even the slightest of defect, it is rejected so that it doesn't go to the customer's end. We maintain very strict quality norms. All our manufacturing locations are properly air conditioned and fully enclosed with PU coating so that it is dust free and there is no contamination. We keep all our raw material, finished goods, and packing material on pallets so that it doesn't absorb any kind of moisture. The second machine of SACMI we again set up in Howrah. That is for two-piece carbureted soft drink. Uh, I can show you some of our samples of water caps which we manufacture. These are the various kinds of caps, and we also do a lot of printing on these caps. Now, recently, government norms have changed, and a lot of more information is required on the caps. That also we have already developed, and it is at the approval stage. These are samples of two-piece CSD caps which we make on our second machine. This goes in for carbureted soft drink. Basically, in a normal person's language, it is cold drink. Then the second unit of cool caps came up at Kordwar, Uttarakhand. That is because to cater to our northern India customers, and that there again we are making water caps. Now, the third unit of cool caps is again coming up at Kordwar, just behind the existing unit, where we will be making single piece carbureted soft drink caps. Coca-Cola, along with SACMI, has developed this new cap because of its low weight. There is a lot of savings in the cost. I can show you few of the single piece caps. You can see there is no liner inside. The machine is already dispatched from Italy. We expect that it will reach by first week of April, and we will commence production by April 2022 end. Along with this machine, we are putting up a PET preform machine. Basically, it is a test tube kind of thing where we make from polyester chips and give to all the food, the beverage industry. They blow it and then make bottles and jars. This is the 5 liter PET preform which Bisleri has given us the design. The mold is also made from one of the approved vendors, and the trials have been done. It is successful. Also, along with that, we'll making these 10-liter PET preforms. The third machine which is coming up along with this is for handles, basically 2 liter, 5 liter, and 10-liter handles, which we will be making here. All three machines will commence production in around April 2022. Next, we just now recently got approval from another leading brand of India, whose cap is a bit different. We did some innovation at our own end, and we developed it successfully. And the new company, they have given us around 6 locations to cater to their water bottle caps. Also, we are in discussion with the leading cosmetic brands of India for their caps that will come up in Kotdwar, because that particular company has two manufacturing locations. One is in Baddi and one is in Howrah. So we are most suited to supply to them. Also, we will venture into pharma caps. So basically, our aim is to be again one-stop solution company for the entire beverage industry. Right now, there is no company in India, to the best of my knowledge, who is providing all products in under one roof. So caps we are doing. Now we are entering into preform. We are already doing shrink film, in which all these bottles are packed. Earlier it used to be cartons, and now shrink film has come because it is 100% recyclable, also light in weight, and there's a lot of savings on in transportation and damage also. Right now, we are selling a lot of pearl films to all the UPP film manufacturers. In future, we intend to print these labels as well, so that the entire value chain is complete. Now, going forward, we will be diversifying in PET bottles wash recycling project. That will be in two stage. I would like to show you some samples. These are the clean PET bottle flakes, and here I would like to invite our director, Mr. Vansha Goenka, to come and tell us more details about this PET recycling project.
Hello, hi, good evening, everyone. As a company, we've already outlined our desire to be among the top three closures manufacturers in the country. But going forward, we also need. It's important that we have a clear visibility on our future plans for the next 2 3 years. For that purpose, we've identified recycling. Specifically, I'd want like before I start talking about it, I'd like to mention a little bit about plastic and why plastic has been termed as evil. In India right now, there has been a lot of conversations about banning plastic. But if you see the properties of plastic, the physical, chemical, economical properties of plastic, and the rising demand of plastic that we've seen during the entire pandemic, it is not possible to phase plastic out. The government of India has been forthcoming in this, in regards to this, with the new plastic waste management rules, where we ensure that this plastic can be recycled. Uh, Before we move on to why has plastic not been recycled in food grade applications, I'd like to go deeper into explaining that today plastic, when once a consumer consumes any kind of plastic, for example a PET bottle, it is typically downcycled in and it is used in areas such as tiles, mugs, pots, or maybe fiber. But there isn't a circular economy today where this plastic, after the consumer consumes this PET bottle, it is again used to make a PET bottle again by making a circular economy and using it for food grade applications. There are broadly two or three reasons for which this doesn't happen. And the first one being segregation at source. In India right now, the waste is not segregated at source. We have all heard different names of plastics such as PP, PE, PVC, LD, HD. Now, if we do not segregate these kinds of plastic at source, it is very difficult to recycle them. The second concern being contamination, because all kinds of solid and liquid waste is all put together. After we consume these kind of plastics like PET bottles, it adds a lot of contamination to this, and it cannot be used to recycle it and use for a food grade application because it can be very harmful. The third reason being today in the country, the technology that we have, it's not apt to ensure that we completely recycle these bottles, remove all the contamination so that we can use it for food grade applications. If you could have this presentation, please, I'd like to walk everyone through the slides. Could you go next? So, in terms of recycling, the first area that we've identified is Assam. Because in Assam, plastic waste has increased from about 50 tons per day to about 300 tons per day from 2004 to 2018, and currently being about 450 tons of plastic waste every single day. During the same time, PET bottle waste has increased 7 times. And with growing urbanization, this solid waste generation of PET bottle waste is only about to increase. Can we go to the next slide, please? The third slide after. So in the first phase, as I mentioned, the technology available today in India is not suitable for recycling these PET bottles into food grade applications. So if you look at the line, if you look at the photograph on the top right corner, that's a line that is spread over 150 meters. Now, what is special about this machine? This machine takes these PET bottles, it sends it through a rigorous pre-washing process, after which it moves to a label removal section, where because today labels are made out of PVC or PP, they remove these labels. After that, it is put through a magnetic separators where all kinds of ferrous and non-ferrous metals are removed. After that, we install German equipment here, which sorts these PET bottles further from any kinds of PET versus non-PET plastic. That could be PP, LD, HD, and then further also segregate them into color so that we actually only proceed with the white bottles forward. After this is done, these bottles are further crushed. They are again hot and cold washed. There are different kinds of flotation processes used to further eliminate all kinds of waste, and then what we achieve are these flakes. Now these flakes are of extremely high quality. What is crucial here to know is that these flakes are measured in terms of ppm levels. Today, all the kind of flakes that are available in the Indian market are used in the fiber space where ppm levels are of 200 ppm. Now, in terms of understanding the purity of the flakes, the lower the ppm, the better it is. Today, we do not have the kind of equipment in India where we can actually have ppm levels below 50 and can use it for food grade applications. You must be wondering why I'm emphasizing so much on food grade applications. It's because the stakeholders that we are involved with today, in the likes of flexible packaging film as well as in the beverage space, both these products are used to pack goods where are eventually used in food grade applications. So given that we are already engaged with these kind of stakeholders, we prefer to design a line which can be used in such a process. Go to the next slide, please. Next. So this is the phase one of the project. Eventually, where we wish to move is that from these flakes, if you look at the top right corner, these are granules. Now these flakes can be converted into rPET, recycled PET granules, through multiple mechanical or chemical processes. Today, the mechanical process is fairly accepted. It's FDA approved. It has a lower carbon footprint. And through multiple kinds of technologies like solid state polymerization or liquefied state polymerization, we can actually achieve these granules. And further, after using these granules, we can further move into creating preforms. And these preforms will be made into bottles again. Could you go to the next slide, please? That's fine. Actually, could you please go back? So now, coming to this juncture, right? These flakes at the moment today have significant capacity. Today, most of these food grade flakes have significant demand in Europe because in Europe, plastic waste rules already command that 30% of any fresh plastic in any kind of application has to be recycled. In India right now, due to these FSSI regulations that have come up, it is mandatory to gradually increase for all brand owners and producers to have 30% recycled plastic. And hence, because we're already associated with these stakeholders, we wish to use this. Also, for one of the key reasons why we selected Assam as a region is due to the subsidies available there. Both the center and the state have been extremely forthcoming in terms of inviting industrialists to set up units over there. The central government over there offers subsidies up to 30% of on total capital expenditure up to a cap of 5 crores, in 2% interest on working capital. Center's share of IGST and income tax refund for 5 years. In terms of state subsidies, 100% refund of SGST for 15 years up to 150% of the total project cost. Power subsidies of 2 rupees per unit up to a cap of 50 lakhs per year for 5 years. So collectively, with all of these reasons, we've identified PET bottle recycling as the next project for the company over the next year and a half, and identified Assam for all of these reasons as I mentioned. One of the key concerns that I mentioned that as to why plastic is not recycled and upcycled is because of segregation at source, for which we are designing programs wherein we would be collecting PET bottle waste at a ground level from wherever it's wasted, where this waste is generated across Assam, and send it to our plant where we can recycle this. Thank you so much. I'd like to invite Ashokji to further discuss on the IPO.
Hello, everybody. It's nice to be associated with to come again with you, all the investors community. In the next series of the IPO, our company is lead managing the IPO Cool Cap Industries Limited, a very promising company based at Kolkata, engaged in the business of manufacturing of the caps and closures for the bottle mineral water industry. Along with the caps and closer business, the company is also engaged in the business of manufacturing of the N95 mask. It is also in a big way entering into the business of recycling of the waste generated from the PET bottles which we consume on a regular or daily basis. The SME IPO is proposed to be listed on the NSE Emerge platform of the National Stock Exchange of India Limited. IPO is scheduled to be open tomorrow, that is 10th March 2022, and it will close on 15th March 2022. The price band has been kept at a very attractive level at a price of range of 36 to 38, and on that particular price range at 38 upper band of the price band, the P multiple of the company is originated at 11. So it is very comfortable and very lucrative for the investors, and company has given a lot of incentive for the investors to invest in this company and make a good returns out of this. The lot size will be around 3,000 shares per application. The retail application will cost you around 1,14,000 per application. An application shall be made in a multiple of 3,000 shares. These are about the basic details of the IPO, which is opening tomorrow. And in regard to the company financials, as you can see on the screen, the company was established in 2015, and thereafter it has made a rapid progresses in all the 5 years. The company has, as on date, a pan-India presence everywhere. Wherever the Bisleri bottles or the Patanjali bottles or Kingfisher Fosters are there, the company products are there on the top of the water bottles. As on date, the company has a phenomenal capacity of manufacturing 200 caps per annum for PET bottle industry. And recently, the company has also established another unit. It's near to existing unit at Uttarakhand to manufacture other sets of caps for the CSD units. In this, there will be approximate addition of 1.5 crore caps in the company portfolio, and the company revised capacity will be around 3.5 crores caps per annum. This capacity expansion will lead to the company to a place of somewhere around 3 to 4 places in the All India ranking in regard to the manufacturing for the caps and closures. The company revenue has been increasing since inception In the last 3 years, the revenue of the company has been going up by 27.68% of CAGR. EBITDA is also very good in this particular line of business. At present, the company is operating at a CAGR EBITDA level of 46%, which is phenomenal looking after the industry. Return on equity is also so splendid. 17.80% is the return on equity which is company generating for the last 3 years. I would also like to give you certain insight about the business structure of the company. The Cool Cap is itself a holding company. All the numbers and data which we are sharing with you are based on the consolidated financial statements of the company. These financial statements has been arrived by merging the company balance sheet along with the three new subsidiaries which the company has incorporated in the financial year 2020-2021. Three subsidiaries has been made by the company just to get the benefit of the taxation as per to get avail the benefit of taxation in the income tax act, as since it says that any new manufacturing company incorporated after 2017, it will lead to a subsidized tax rate of 15%. To take the benefit of that and to ensure that it is benefited for the investors, the company has made these three subsidiaries as a fully owned subsidiary. 99.99% shares of these subsidiaries are owned by the Cool Cap Industries Limited. So in all, the valuation is there in the company, but for a taxation purpose, it has been separated in a subsidiary model. In these three subsidiaries, the company is proposing a new vertical lines which will add to the existing line of the company to increase the revenues or to increase the EBITDA of the company on a larger scale. In the first of the subsidiary, the company has planned a plant of manufacturing the shrink films. Shrink films are our added product which will sell along with the caps and closures that will increase our EBITDA margins and the PAT margins. And the sale for this product will be made to the those companies to whom we are already making the caps. So we don't need to have a invest further in marketing type for these selling these products. Another subsidiary which our company has floated is a Puro Flexi company, in which the company is planning to launch a recycling project, which Mr. Vansha Goenka has already elaborated you. With the addition of these two products and another line which his company has added is the antimicrobial film treatment. So these three products company has been added in their subsidiary portfolio along with the holding company caps closer portfolio that will add to a phenomenal growth in the last 3 to 4 years as per the projections shared by the company. So in all, the company is very good for future growth. In as part as concerning the valuation part regarding how do we arrive at 38 rupees price of the company, 32 to 38, we have given a very nominal value to the company turnover. It is 1% of the total turnover of the company. We have given that along with the profit levels. The company is on average is generating 3 crore PATs. On that particular lab PAT, we have given a valuation of the company at a 44 crores post listing. So overall, looking after the turnover growth in last 3 to 4 years, looking after the expansion plans in the coming year and already made in the company, and looking after the consistent track record of the profitability, the financial seems to sound and it is maybe a good investment for all the investors.
Should we start the Q&A session? Ashok ji?
Yeah, we can.
Yeah. So, those participant who wants to ask the question, they can type the question in their chat box. We will answer the question one by one. So, I think we can start. We have quite few of questions. So, first question is from Mr. Surendra Sharma. So, he say, why our business segment are in separate subsidiaries? So, I think Ashok ji, you have answered this question. You
Yeah,
like to elaborate on it?
Yeah, I
yeah,
would further like to add here something. Uh, why separate subsidiaries? Because we want to stay in MSME purview. A medium-sized company with a fixed capital outlay of below 50 crores and turnover less than 250 crores is under medium scale. There are a lot of incentives and subsidies given by various state governments and the central government for the MSME, and it is the focus area of the government of India to promote these MSMEs. So that is why we have made three different subsidiaries for three different businesses, apart from the income tax benefit which Ashokji mentioned.
So next is question from Dr. Shailendra. He asked, packaging should be fine because in transit time, carton boxes damage maximum number of items. It's a very loss factor for the customer. I think it's a suggestion.
So already the company has is working on this particular thing. Due to this loss of the goods in the transit, the company has started manufacturing the shrink films. In this way, there is a minimum loss of the cartoons or the boxes which are in the transit. So the company has recently floated a subsidiary to manufacture the shrink films, and nowadays all the companies are using these shrink films to transport their products rather than on a corrugated boxes. Rajivji will elaborate on more on this.
See, basically, cartons we as all know is made from paper, and paper comes from trees. So we have to cut more trees and to make more paper. Here, once plastic films is made, and there is a certain blown ratio which we do and make these kind of shrink films. As I mentioned earlier, that it is 100% recyclable, and with the present norms throughout the world as well as in India, that we have to compulsorily recycle 30% of plastics which all the brand owners use in packing their products. So that has come become mandatory, and also post 1st April 2023, 30% recycled plastics will need to be compulsorily used along with virgin to pack the products. And there is a very big demand for these recycled plastic. I could see some more questions. Uh, Vastupalji, should I answer one by one, or I can even
I I,
club
I
the,
think sir we can go one by one.
yeah.
So maybe कुछ skip ना हो जाए बीच में.
So basically, shrink film versus carton. You are right, Mr. Sailendra. Yes, it helps in a lot of savings, not only in terms of damage of the cartons, but also the cost is also low compared to corrugated cartons, and there is more space in the truck, so the transportation cost is also very less.
So next question is from Mr. Tarun. So he asked, PET bottle recycling cost vis-a-vis new bottle cost. Uh,
So, Tarunji, no, it's a good question. As just mentioned right now, due to the government norms, 30% of new bottles that are supposed to be made will have to have a certain percentage of recycled plastic. So these PET bottle flakes today are sold somewhere between in the range of 75 to 85 rupees per kg, and 30% of it has to be incorporated with virgin plastic. So specifically, yes, at times the cost may increase in the short run right now because supply of food grade flakes aren't easily available because there aren't any good enough manufacturers or recyclers making food grade quality flakes. But going forward, it would be in a fairly similar on a similar price.
See, I would like to further elaborate on this question that PET bottle recycling cost will be definitely more compared to your virgin plastic, because we will be installing very good quality machines so that there is a minimum contamination. It all depends on the price of the bottles which we get. Considering that there is a shortage of these waste bottles in India, Government of India has recently allowed imports of plastic PET bottles, specially, so that there is no shortage. and these prices also come down.
So next question is from Mr. Roberts. So he's asked, what makes you feel that recycling business will be a success and drive a top line? I think you have already answered it, sir. So would you like to elaborate anything on this?
Yeah, sure. See, in January, the notification has come up by FSI that now PET bottle chips are allowed in food grade application in India. It was already there in Europe and US. Right now, recycled PET chips is being sold at $50 to $100 more than a virgin chips. The reason being, it's very high quality chips, and there is a huge demand in Europe and US. In India as well, companies like Reliance and Indorama are already into PET bottle recycling, but that is for fiber grade application. We will be doing it for bottle application and polyester film application. Already we are selling a lot of polyester film for companies like Jindal, Polyplex, Easter, SRF. So we are in discussion, and with them they will be buying these PET bottle recycled flakes, washed and cleaned, because for them also it will become mandatory to use 30%. And as we have mentioned, there is a very big shortage of good quality PET chips as well as flakes in India, and that's why it will be a very good business. And the demand will all of a sudden will be a very pent up kind of demand, and it will be very difficult to cater to such high demand.
So next question is from Mr. Dilip Shah of Smart Investment. So he's asking why there is a setback in bottom line in FY21.
Yeah, I will answer this. First of all, can you play once again the investor presentation, profit and loss
Sure,
statement?
sure. I will add it.
Next page. Next. Yeah, this one. Yeah, as you said, this cannot be said to be a setback in the bottom line of for the FI 2021. As you can see all on the screen, the EBITDA level of the company has increased from 6.22 crores to 7.33 crores in the FI 2021. It is only due to the addition of one of the more capex line in the Uttarakhand unit. The depreciation component has been increased somewhere by 50 lakh rupees as compared to the previous year. So one of the factor in decline in the PAT is due to the increase of the depreciation which the company has made a capex. This capex was made in the company in the October 2020, and the production started in November 2020. So the sales did not came up for this particular plant, but the depreciation has came up. That's why this higher share of depreciation was charged in the last financial year. Similarly, since new capex line was taken, a new term loan was also taken, which has increased the interest burden on the company. But simultaneously, since the production started in November 2020, so and due to the effect of the corona, sales could not be achieved of desired level. But in the current financial year, the sales company will be somewhere closing a turnover 47 crores, and we will have a good PBT and PAT level in this particular year. So it cannot be termed as a setback in the bottom line. It is just to the eliminate of the depreciation and the certain interest cost. The company PBT, PIT has been declined to a certain extent in comparison to last year. Last year was 3.21 crores, and this year it is already 2.90 crores. So only a difference of 21-22 lakh rupees is there, so which can't be termed as a setback in the bottom line. But although the EBITDA has been increased or substantially 6.33 to 7.33 crores.
So next question is from Mr. Tushar. He's asking what is your market share? Rajuji?
Yeah, it will be very difficult to tell it in terms of percentage because this market is very fragmented and these caps are manufactured by a lot of unorganized players, excepting barely a couple of them are in organized sector. So, on a conservative estimate, we at presently think we should not be around less than 10% on a pan India level, and it will be higher in especially north and eastern India, around almost 20%.
So next comment is from Mr. Kulbanda. RHP mentions that object of the IPO is to fund the working capital requirement. Would there be a substantial rise in working capital post expansion and commencement of recycling business?
Ashoki, you will answer or should I answer?
Since the proceeds from this IPO are meant for meeting the working capital requirement of the caps and marks division of the company, these recycling businesses has been planned in the subsidiary of the company, not in the pool cap. So the pool cap investments remains the same. The business model remains the same as our holding company, manufacturing of the caps and closures only. So the requirement, if increased in a subsidiary company due to the commencement of recycling business, shall be met by the borrowing from the bank or by the promoter contributions. As of date, there will be no effect on the holding company pool caps working capital requirement in this regard. What we have mentioned in the RHP are the data of the only holding company and the funds where these working funds will be utilized for meeting the working capital. There is no relation of these working capital with the recycling business because it is coming up in a subsidiary.
Also, we will be availing cash discounts now, which is quite good on the polymers which we buy from Reliance, Haldia, and Indian Oil. So, it will further add to our bottom line.
Okay, okay. Next question is from research is what is the current asset turnover of the company?
If you combine all the gross block, which includes the plant and machinery and the intangible or tangible assets in the form of land and building, the as on day the current asset turnover of the company is around 1.5 sorry 1.5.
Okay, okay. Next question is again from Mr. Roberts. Is there any demand for usage of recycled plastic? I think we had covered in. So, any further info on this, Rajuji Vanshya?
Yeah, sure. So, Mr. Roberts, specifically for recycled plastic, I was talking about PET bottles because plastic is of various types. Specifically of PET bottles in India, when we first started recycling plastic, it was used in downstream applications, downcycled applications such as tiles, mugs, and pits. Then it started being used for fibers. But the space that we're targeting, which is food grade, it has significant demand, uh, and the current supply is not meeting it. Can be used in packaging film as well as to make rPET chips, which can further be used to make preforms. So these are called bottle to bottle grade flakes because eventually it will be used in the entire value chain of recycling uh, recycled preforms.
Another question from Mr. Roberts. How are you funding the capex for expansion and new recycling unit?
As
See,
again I
we,
told you, these are the expenses which are planned in a subsidiary of the company for the meeting the capex. In the pool cap, the capex has already been done. Company has made a payment of acquiring the machinery to the company based at Italy, and the machinery will be delivered in the next financial year in April. So no proceeds from the IPO shall be utilized for meeting these capex of the company. In regard to the capex which company is proposing in the subsidiary company shall be met by the bank borrowings and the promoter contribution from that.
The capex on Unit 3, which is coming up at Kotdwar, is funded by HDFC Bank, 15.5 crores of term loan, which is almost disbursed, and the machines are in transit. And the new recycling project will be funded by Punjab National Bank, who has given us in principle sanction. Uh, s- they are the first bankers for Coolcap Calcutta unit. And there was one more question down the line: what is our average cost of borrowing or interest? All these banks have offered us 7% interest per annum on both term loan and working capital.
Okay, thank you so much. Next question is from Ms. Saroj. So, who are our main client?
Can you run again the presentation, Vastupalji?
Sure, just a second.
So, Sarojji, these are our clients. The major client is the Bisleri, where around major sales of the company is made to the Bisleri. Along with the Bisleri, we have on our portfolio IRCTC, Kingfisher, Patanjali, Clear, Mukti, Pink, and Mimo Amor. These are the major customers which contribute to our sales. Recently, a development has been made. A parlay has also been added in the portfolio of the company. A Bailey Water brand name is Bailey.
Next question is from Mr. Amol. How do you see the growth of user industry, mineral, soda, juice bottle manufacturing going forward?
See, there is a growth of approximately 10 to 12% in juice and water segment, also in soda, but in carbonated soft drink, it is more or less stable because of growing health consciousness of people and not very averse to your this carbonated soft drink. So now there will be a change in consumer behavior pattern. It will be more of fruit juice and where carbonation will be done. Already there are a couple of products available in the market. So we expect that going forward growth should be 10 to 12%.
Okay. Okay, thank you. Next question is from Mr. Rahul Bharadwaj. He asked, what is the typical working capital cycle, mainly receivable and inventory days? So, who will, Ashok ji or Jayaprakash ji?
Working capital of the companies as present is around 4 to 5 months.
Okay, and receivable, if you can bifurcate in receivable and inventory days.
Receivable holding will be around 2 to 3 months, and balance in
Okay,
the raw material. And we also get some credit from our supplier for the other creditors also. So
okay,
overall,
okay,
for 4 to 5 months is our cycle period.
okay. Uh, Next question is from IPO Bound. As we are almost at the year end, what is the EBITDA margin and net profit margin for the current financial year and chance of improvement from the last year?
The current financial year, as I already told you, the numbers for the February for this financial year 21-22 will be around a top line of 47 crores, which will definitely increase the EBITDA margins of the company and the PAT levels from the existing levels.
Okay.
At present, the company is targeting a PAT of EBITDA level of sales, which we incurred in the which we generated in last financial year, and the PAT will be somewhere around 10%.
Mhm. Okay. Next question is from researchers. I think we have covered this. I'll go to the next question. Next question is from Mr. Rahul Bharadwaj. what is the typical amount of raw material we keep with us?
Normally, we keep an inventory of 15 days raw material for products which are locally available, and the one which we import, for that we keep at least 45 days of inventory.
Okay. Next question is again from Miss Saroj. She's asked why global giants like Coca-Cola and Pepsi are not our client as per the presentation. Who are the suppliers to this big companies in India?
See, PepsiCo has their own cap manufacturing company. It's now majorly by Varun Beverages. So they buy very little cap from outside. And once I just had today discussion, they were very happy that we are coming up with a single piece carbonated soft drink caps and comptoir. Right now what they make in house is only for water, and these single piece carbonated soft drink caps they are very eager to buy from us, and they have asked us, assured us that once you commence commercial production, then they will conduct audit. It will be a little lengthier process, around 2 to 3 months normally it takes for their approval. Whatever their norms, we think almost more than 90% we qualify. We even have the FSSC certification. And regarding Coca-Cola, yes, they have their all vendors pre-approved before we came into the market. So there was very little room for a new player. All the leading brands they normally keep two vendors. One is a major supplier, and the second one is a secondary supplier. Here again, as I mentioned, that the new machine which is coming is for single piece CHD. This has been developed jointly by Coca-Cola and SACME, and they have their worldwide approval. So with this cap, we expect that we will also be able to crack Coke in near future. This demand suddenly went up so high that this particular grade raw material is in shortage now, because it is only being manufactured by Baruch, which requires environmental test of more than 600 hours, which no other company, even Dow, Exxon, or Reliance or Haldia, is making. So once we have been able to get some raw material from Baruch for this, because we have been in touch with them for quite a long time, and we buy a lot of raw material of shrink film also from them. So we hope to crack these two customers with our new line.
Okay, thank you so much. Next question is from Mr. Amol. Company's top line has been increasing during the COVID period. Does it mean that the company was not impacted by the COVID pandemic? Interesting
See,
question.
when COVID happened, uh, we were fortunate enough that we were allowed permission from the district magistrate to operate our plants for production, because water comes under essential commodities. So yes, the demand of packed drinking water was less because there were not much of traveling. And once the lockdown was over, suddenly there was a pent up demand. So whatever production we could manufacture during lockdown period also was ultimately sold in the market by year end. So there was not much of impact of COVID on our production.
But there
Selling
would be
thing.
effect of the profitability we could be declined due to this. Although if COVID was not there, our profitability was might be much higher than what we have reported in this financial year. Due to the sales were not happening, production was going on with a limited personnel, so all the overhead costs would keep on increasing on the company. So that's why there was certain increase in cost in comparison to revenue. That's why there was a dip, little bit dip in the final profits of the company for this current financial year.
Okay, very well answered. Next question is from Mr. Vipul Sanghvi. So, which are our top three customer and what is their share in our total revenue?
See, our topmost customer is definitely Bisleri, and along with that, there are a lot of other brands whom we are catering, Kingfisher, Foster's, which will be almost equal quantity in terms of percentage terms. Bisleri will be to the tune of 50% of our production. The rest all is more or less equally divided.
Okay. So next question is from Mr. IPO Bound. Have profit got impacted by rising crude price in last 2 quarters?
See, we have a understanding with our customers that for every 6 rupees increase or decrease in the price of the raw material, we get 1 paisa increase or decrease in the price of our caps. So there is not much impact on the increase and as well as the downward trend of polymers. The polymers are directly connected with crude. From crude, after it is refined and then from the downstream petrochemical units, all these polymers are made. So we are able to
Okay.
pass on the increase and decrease to our customers.
Okay. Very well answered. Next question is from Research Ace. What is the quantum of debt from promoter on balance sheet as on Feb 2022?
Jayaprakash ji.
2022, the
जय प्रकाश
amount
जी
is,
वापस बोलिए सर.
as on February 2022, the amount of promoters' debt is negligible. It is negligible. It is not, I think it would be less than 2 crore rupees.
Okay. Next question is from Mr. Sumit. How much new capacity addition will add to our top line for FY23 and FY24? Likely numbers based on your asset turnover ratio.
So these are the assumptions for the current financial year. As a statutory required, we cannot comment on the future projection of the company. But you have linked this question with the asset turnover ratio. As I already told you, if you exclude the land and building from the asset turnover ratio, the our turnover is somewhere around 2.5% of the cost sales of the company. Land and building cannot be taken into consideration while calculating asset turnover of a company.
Sure. Next question is from Mr. Harsh. Do we have Pan India presence? We do have Pan India presence.
Yeah,
Would you like any? Yeah, please go ahead, Rajiv ji.
we are majorly present in northern India, eastern India, and northeast India. But our caps also goes in some of the regions in west as well as south. Also, we have a network of our distributors who are also selling caps to the regional brands. So, but gradually, our aim is to penetrate the entire India so that we can reach each corner and our caps are sold everywhere.
Next question is from researches again. What is the average cost of production of per cap or enclosure?
Ashokji, can I answer it?
Yeah, yeah, please.
Our average cost of production of a 1.5 gram cap is as on date around 22 paisa per piece. As I
Okay.
mentioned, that it is linked to the raw material. With every 6 rupee increase, our cost also goes up by 1 paisa, and which we again pass on to our customers.
Okay. Next question is from Ms. Saroj. So she asked, who all are our main competitors?
See, our presently there are three main competitors. One is in West, one is in North, and one is in Maharashtra.
Okay. So who are our suppliers for our suppliers for the plastic chips? I think we have covered this. So would you like to elaborate anything, Rajiv ji?
Yeah, as I mentioned, for water caps, Haldia Petrochemical chips are approved. It is the grade 5002L. And for CSD caps, Baruch is approved 6562. And Reliance is also approved one of their grades, but presently they are costlier by almost 2 rupees a kg. So presently we are buying for water 100% from Haldia Petrochemicals.
Okay. As we are almost at the, I think this is the repeat question. Sorry. I Next question is from Mr. Rahul. I can see company has very high debt level when compared to the size of the company. Any plans to reduce the same?
See, we are a growing company. That is why for every project we have taken bank borrowings. But all our projects we have qualified for substantial amount of subsidies. Our Unit 2 Kotdwar subsidy of 100% capital subsidy, which is approximately 2.5 crores, is already verified and sanctioned, which we expect to receive in next 3 to 4 months. This will go straight directly to the bank, and our term loan will be reduced. And whereas the other subsidies which we get, like power, interest subsidies, that all will go towards reducing our working capital limits as well. So a lot of debt will be reduced from our incentives and various subsidies, and also from the profitability of the company.
Okay.
Also, I would like to add the ratios for better understanding of the debt level of the company. Debt equity ratio as on March 2021 is around 0.95 long term debt. And if you take in total debt into consideration, it is coming at 1.31. And with the addition of new loan which company has taken in the current financial year to the tune of 15 crores from the HDFC Bank, and with the doing of this IPO, the debt equity ratio will be somewhere around, um, overall debt will be somewhere around 1.40 only, and for the long term debt it will be only 1. So although numbers are looking good, but simultaneously the same amount of equity has been invested by the company and their promoters to maintain the level of debt at a very pretty decent level of 1 or 1.1, 1.4.
So next question is from Mr. Harsh again. So are we expanding in western, southern or central parts of India with the new units to be located near to the customers?
We are already present in central India. Right now, we don't intend to put up manufacturing facilities in west and south. Our capacities will be growing more in north and east, so that we operate on economies of scale. And transport cost on caps is not very much. So we will be supplying to, we will first develop a market and then supply from our existing manufacturing locations. And if the demand is good and we get very good response, then maybe later in future we will think of. But first we will complete the unit 3 of cool caps in Kotdwar and the recycling, and then maybe probably we will think of any further manufacturing location either in west or south.
Okay. So next question is again from Mr. Harsh. And can company pass on the price hike? I think we have covered this question. The mechanism, how does it work? Next question is again from Mr. Roberts. What is the status of recycling project from when it will start the production?
We have already taken land. We have been allocated around 10 acres land, in a place called Jabjab Kuchi, which is around 70 kilometers from Guwahati, by AIDC, Assam Industrial Development Corporation. It has a ready shed of around 55,000 square feet. The machines, the technical evaluation has already been done, and now we are at a commercial negotiation stage for the main plant, the washing and cleaning line, and the sorters. We expect to start commercial production by March 2023.
So I think another repeat question is from another person. Was that what is the market share of cool caps in Indian market? I think we have covered it. Next question, and this is the last question. It's from Mr. Roberts again. So, what is the total capex needed for the recycling plant?
Yeah, for the washing and cleaning line, it will be approximately 35 crores, including land, building, machines, power, everything, and the utilities.
Okay. Okay. If anyone has any further question, they can write it in the comment box, or we will close the meeting. So I think we have covered all the questions. So thank you everyone for joining the IPO meet of Coolcaps Industries Limited. Thank you, Mr. Rajiv, Mr. Vansh, Mr. Ashok, and Mr. Jay Prakash.
Ashokji, would you like to say any closing note on the IPO?
Yeah, friends. So as already informed to you, this IPO will be opening tomorrow. So looking after the all the growth prospects the company have, and it is scheduled to achieve in the near future, and with the decent valuation, I urge all of you to make the best utilization of this opportunity and invest in this sun-rising industry, which is growing at a phenomenal rate. And along with that, company turnover and the pets will be also growing in a rapid rate. And it's a very good, high lucrative EBITDA level company with a good amount of percentage of PAT is generating. So overall, this will be a good bet for the investors in a long-term period.
Thank you,
Thank you,
Ashokji, for
everyone.
your kind words, and Mr. Vastupalji for organizing such
Thank,
a lively event and with such active participation. Thank you, everyone.
thank you so much.
Thank you.